Tonight's broadcast is brought to you by the several inquiries that we got this week about how to get the EIDL increase and actually how to get a loan because you cannot get the EIDL increase. So we want to bring to you tonight issues about the EIDL loan, if you don't have one, what to do, the U.S. Treasury Program, what's going on with that. And if you're on the replay, thanks for checking in with us. If you're on with us live, say hi, tell us where you're coming from, and let us know what questions you have, because we're going to do Q&A, maybe not right now, but we will be. So we're looking forward to hearing from you. Thanks so much, Trevor. Take it away, even though that was not in the script, but I'm saying take it away because
I get to talk?
Yeah, sounds.
You just told me a minute ago not to talk.
I said not to talk during my intro.
Oh, I thought I was not supposed to talk during the whole show.
No, just during the intro, because I'll lose my train of thought, and we know how that happens a lot.
Okay, tell me where to begin. Well, we have a script.
We have a script.
Am I allowed to adhere to the script?
You can adhere to the script. I got the banner, so let's do it. You want me to prompt you?
Who are you and what have you done with Linda Ray?
I know, I'm all together. I'm all together tonight. Yes.
It's not necessarily true as of 6 minutes ago.
It's never true. I'm a last minute Larry.
That's a whole other drama.
Trevor is triggered. If you're not early, you're late. And I'm like, if I'm not late, I'm on time. Wait, did that even make sense? No. Okay. No. That's all right. It doesn't matter. So thank you, everyone who's joining us. Let us know where you're signing in from, because we have just enjoyed 26 months of talking to people all over the country. So we do love hearing where everyone is from. And yeah, so if it's lava hot where you are, I'm feeling you. I got my napkins to blot my sweat. Okay. I'm
wearing a sweater because someone likes it really cold here in the house.
Mm-hmm. Arctic. Hello, Dino from California.
Often have to wear sweaters around the house.
All right. So let's get into, first of all, do you want to just give an update on EIDL? Because we did have people email us, can you help me with my increase? So what do you have to say about that? Because it's open and shut.
It needs to be repeated. The program is closed. The funding is exhausted. And there are no updates since May 16th.
Which is its own tragedy, really.
Well, it's a tragedy because there's something like $10 billion apparently lying around in some additional account where basically the SBA transferred money out of the program into this kind of administrative account. For what purpose? They have an administrative. It's a federal thing. It's a federal agency. They have to do things that way. And rather than allocating that money to all of you, the SBA set aside this money. And so back in May, Senators Cardin and Van Hollen wrote a letter to Administrator Guzman of the SBA, basically begging her to transfer that money back into the COVID-19 EIDL fund to assist all of the folks like you who had not yet been approved either for an original EIDL or who had not been approved for your increase.
Yeah.
The increase modification. As of my research yesterday, and by the way, just so you all know, Chad Eckert knows this about me. No, I do not do any research on Reddit.
Oh, no, that would be a big fat no.
No.
Like if I had a GIF, which I do, by the way, Giphy/AuroraConsulting.com. No, Giphy.com/Aurora Consulting. Nope. He does not believe in Reddit.
So I did my research, and there is no further word on a response from the SBA to Senators Cardin and Van Hollen in their letter and begging the SBA to transfer those discretionary funds back into the COVID-19 program. This is not to say that it can't happen. It might. Only time will tell.
I just want to chime in here on this since we are talking about politicians, and I am by no means savvy about politics. But, if you were to even go back at any time in 2020 or 2021 and watch our videos, you would see that we were talking about how the politicians have no juice, blah, blah, blah. They're useless, blah, blah, blah. And then something shifted that we started telling our clients, call your senator. And lo and behold, the approval started coming in very swiftly and surprisingly, and we were happy about it. But, you know, that was the extent of the positive response from politicians. There was a time when there were a lot of people talking about how politicians should be doing this and could be doing that, and they were doing nothing. And I think we're back to that. Okay, I think we're back.
Well, there's been to conclude our opening thoughts about the COVID-19 EIDL program, because the EIDL program itself is still ongoing for natural disasters, but the COVID-19 aspect of that is essentially closed. But since May 19th, since the letter went out from Senators Cardin and Van Hollen, no response from the SBA, and there has been no substantive action from the Congress or the Senate Finance Committee in any regard that we can discern from our research. But there is, as we announced in our last show, there is some hope through the United States Treasury Program, which is the program, the state Small Business Credit Initiative, and this was about $10 billion. A little more than $10 billion that actually was allocated through the Build Back Better program, and was it Build Back Better or American? I forget, but whatever President Biden's legislation that was passed last year. So the Treasury was allocated this money, and as we reported back on May 19th, the Treasury had approved so far 5 states. Those states are West Virginia, Maryland, Hawaii, Kansas, and Michigan.
Oh, I have a banner for
and
that.
Those funds have been allocated to those states, and they will distribute them according to their plan for distributing them, which I'll explain in just a moment. But as of yesterday, again, with my research, which does not include Reddit, there are no other states currently that have been approved besides these 5 states so far. Do you have something to add before I talk about how to apply for it?
I'm not really good at math, but I'm going to go out on a limb here that there are 50 states in the country, plus a couple territories, and there's only 5 approved. What?
You know, this is why during the 26 months that we did the COVID-19 EIDL program, often speaking to folks like you here on our YouTube show, or when we used to do our free consultation calls, or to our own clients who hired us to manage the program for them, the application for them, I would say to them, you know, I understand your impatience, and I understand your lack of understanding on. I understand your lack of understanding. It doesn't sound right.
Well, actually, when you cleaned it up, you did pretty good.
I did okay? All right.
Yeah, you did pretty good.
You know, we don't do a lot of shows anymore, and I've basically been relaxing for the last 2 months. Today I watched episode 9 of Star Wars, you know, The Rise of Skywalker, and I was crying. I'm just going to tell you. I was definitely, it was cathartic.
People don't want to know. They don't want to know that.
Everybody cries at Star Wars. Don't you cry at Star Wars? But as I used to say to folks, when it comes to the federal government, there's a way that the government has of working, and often it can be a lot slower than what we folks out here, the constituents, if you will, the taxpayers, what we expect or need or require. And so to answer, this is my long-winded answer to your question.
Oh, there's a point
and
coming?
your statement. Yeah,
okay.
Why 45 states and other territories are not approved yet? You know, there's a process. But keep in mind, the states also had to apply for this program. And there is a matrix. I don't know if you have the link. You can go and see if your state had applied.
Yeah.
Like we know here in Connecticut, we know the state of Connecticut applied, but so far has not been approved. So you can go to the matrix on the U.S. Treasury website to see if your state applied.
This is the thing, by the way, and REE had made a comment about calling your congressperson. We were advocating for our clients to call the U.S. senator, but I'm going to be on a different point here with the statement, if I don't forget, because I'm babbling on here. As a business owner, okay, we know you're running your business, and we know that you're busy running your business. There are certain things that I know, because the people that are here, you guys watching, you're not the ones that concern me when we have people coming at us with certain things they share. As a business owner, there are responsibilities that you have that you must embrace to yourself for your business, that you must embrace wholeheartely, which is to advocate for yourself. And now I'm going to say, I'm not a lawyer, and I know with dealing with politicians and some of the chaos that goes on in the process with government crap. It's very difficult to do that and not get discouraged and disappointed. But you do have to take steps. So of anyone who's here that's in the, put the banner back up, Linda, that's not in,
put the banner back up, Linda.
Anyone who is in the states not mentioned here, you call.
Well, before you call, do we have the link for the Treasury? We have it.
No.
The link is in.
The link is somewhere.
In the previous show we did. We'll see if we can get it up for you later and put it up in the comments.
Yeah.
But go to the U.S. Treasury website and you can see the matrix of the states that applied for it. It gives you status. It says applied for and the date, and then it tells you if it's been approved, and it tells you how much it's been approved for. So.
I found it.
We strongly recommend you do that. Now, before we go any further on this U.S. Treasury State Small Business Credit Initiative, which is SSBCI or SBCI, you have to understand that your states have individually decided how they are going to allocate these funds. Please do not confuse this program with the Small Business Administration COVID-19 EIDL application process, because some states, notably West Virginia, are not going to provide the money to community lenders so that you can go to a community lender or a minority lender or a CDFI, Community Development Financing Institution. These are the basic organizations that are getting the money from other states. In West Virginia, that's not happening. What West Virginia is doing is creating a venture capital fund, like Silicon Valley venture capital. So you got to go to your West Virginia angels and ask them to be your capital venture adventure people. I'm not really clear why the state of Virginia decided to do it that way, but that's their economic directors, politicians, whatever decision. So every state is going to allocate these funds differently, but mostly we're guessing, at least from the other states so far, like Maryland, which was the first state to apply for the program. Maryland is handing the money, their allocation, their portion of it, to CDFIs, Community Development Financial Institutions, minority-focused lenders, and community-based lenders. The small localized lenders that specialize in underserved communities and underserved small businesses. And so those lenders will make lending decisions on how to lend this money out. And that will lead us into another segment we're going to discuss briefly this evening on filling out an application to apply for money. So that's the update on the Treasury.
Yeah. Okay. So next, so far.
The script is right there, by the way.
Oh, I can't see that, even with glasses. What is that, like font 7? I need font 70, okay? So, no, we already talked about EIDL is closed. Getting your increase, there is nothing shining any light on that other than a learning lesson of whatever paperwork you have, if you want to go through it again in case they open it up again, we don't know. The U.S. Treasury updates, only 5 states out of 50. And now, so let's go on to the less appetizing topic that's more general and not specific to EIDL, which is actually applying for business financing
For a traditional lender.
commercial loan when a disaster loan is not available. So go ahead, because I know you're trying to kick me under the table.
No, I didn't. That wasn't me kicking you under the table. It was me kind of feeling kind of chilly because it's cold in here.
Okay, that's enough. It's summer. The AC is staying on. That's it.
The AC is at 63 degrees.
It is not. It's 73.
It feels like 58.
Okay. So,
okay.
But wait.
Chad, there is no increase to be had at this time.
Yeah. There's not even the
portal is closed. The application process is closed.
The only thing going on that I understand, and Trevor, confirm or deny, is if your loan was approved prior to May 16th, but you changed your bank account and that loan approval hasn't been funded in the proper bank account, that's the only thing that is happening right now for folks who are still trying to get funded.
Yeah. Thanks for backing me up. So we threw the car in reverse real quick and backed up. If your loan was actually approved and you had signed a loan agreement or an increased modification loan agreement prior to May 16th, the SBA has asserted to Congress in testimony in Congress that all loans that were approved prior to May 16th, the funding was allocated. And if you haven't received that money yet for an approval that you received, you will. If your banking information is still being worked out, we encourage you to call SBA and make sure that somebody's working on your banking information, because after a certain not micro business loans. We're not going to talk about micro business loans, but I'm glad that's up because I'm going to tell you why I'm not interested in micro business loans. Going back to the banking information, you stay on top of the SBA to make sure that your information is getting updated, make sure your bank is aware of the pending deposit, and more importantly, your banking information is accurate, because the SBA runs a test with your depository institution to make sure that it's a legitimate account. So, okay, if you fail to obtain an approval through the EIDL, if your state is like West Virginia, venture capital, or does not receive money from the Treasury Program, what to do. And this kind of takes us full circle all the way back to March
2019,
of 2018, 2019, 2020, when we were financing brokers and we were assisting we were building our practice to assist small businesses, and we closed quite a few deals, and we learned a lot in that short amount of time before COVID wiped us out. And so
we were dealing with the SBA, and we should have known what was going to happen.
Well, we did know. In fact, the first 40
complete shit show.
The first 40 COVID-19 applications that I worked on. Hey, Josh. And we're going to talk to Josh about his petition in just a moment.
Yes.
But let me just finish. So we had closed a couple of SBA deals, and that's why in March and April and May, June of 2020, when the first 40 clients hired us to get the EIDL loans, I said to all of them, I doubt you're ever going to get approved. The SBA is a nightmare to deal with.
Yes.
I was proven wrong by the SBA. Every one of my clients' loans, all 40 loans, were approved and funded. With minimal drama, considering it was the SBA, considering that COVID-19. Of course, now we look back, all of us, and we know why, because basically SBA was just throwing the money out the window at people, including many criminals, of which they are still being reported as being put in jail as we speak. Some guy in Maine this morning is getting up to 30 years in jail for fraud on the PPP program. But traditional commercial lending, I want to start with that. So you have an account, your business account at a commercial lender, and you want to get a line of credit to grow your business, to pay for marketing program, or whatever, or you want to get a loan to buy a building for your business. Let me give you all the really bad news up front. Number one, the banks don't want to lend you any money.
Mm-hmm.
Having been a direct lender in the residential mortgage field for 30 years, I'm astounded at what we discovered when we were financing brokers, that banks suck at the idea of lending money to small businesses. Essentially, and this is the second part of the bad news, a bank, when they're going to lend you money for your small business, you have to be squeaky clean perfect. You've got to have massive amounts of substantial income on your tax returns for the previous 3 years and in your current profit and loss. Your cash flow has to be unbelievable. Your balance sheet has to be like mind-blowing, something out of a textbook in a college class about small business. And then they'll lend you the money.
Yeah.
Here's the problem. That's not how people run their businesses. It's completely disconnected from reality.
Yeah.
It's the money is available for people who don't really need it. Because if you are that qualified, if your cash flow is that great, your balance sheet is that awesome, and your tax returns, you're showing positive, tens and hundreds and thousands of millions of dollars in profit every year after your expenses, the hell do you need a loan from the bank?
Right.
So there's a complete disconnect there. So that's our first warning to all of you as you go into the traditional lending arena, to be prepared for that. We've done a series of videos on how to apply for a loan, including things like, 3-year look back period and all that.
Well, this is where I step in, because as the marketing person, he's the financing guy, I'm the marketing person. So I get excited about sharing shit about what we've done when nobody was watching. Nobody was listening, nobody was watching, and nobody was reading the stuff that we did in 2019, that if they had, they would have had a little bit of a smoother time, albeit SBA is dysfunctional and that's its own little bubble, but you would have been way more prepared for what was to come for your business and how you prepared. So what I've been doing lately, and just bear with me before you start kicking me under the table, is I've been trying to recycle some of that intel so that people could have access to it, because why go back 2.5 years on our blog page for something when, and we have a whole financing fodder playlist that I've been kind of putting on our home channel.
You remember we used to do the shows with WTF Wednesday?
Yeah, we did.
Financing Friday.
If Then Thursday.
We had like 3 people watching our shows back then.
I got to tell you, we were hustling YouTube, and the algorithm was like, hey, fuck you. And so now I'm just taking our library and repurposing it for folks, because if you didn't get any EIDL loan and you have to now still go through financing somehow, some way, because maybe your banker, you had a picnic with your banker, you're still going to have to be prepared, because they're not just giving the money because you had a
I like that you said picnic with your banker. Because here's the next piece of advice I want to share with you about working with traditional lenders. Near the end of our run, right before COVID basically closed us down, we were working with a new small business owner. He had just purchased what we call here in New England a package store, which is essentially a liquor store, a place where you can go to buy. I don't know why they call it a package store. I'm from New York. I don't know why they call it that up here. Hoagies, submarines, heroes, wedges. It's a sandwich.
We called it a wedge in New York.
Well, you lived upstate New York.
Super sticker.
Hey, Josh, thank you. In downstate in New York City, where I come from, we called it a hero.
We're getting a pizza.
Anyway, so
we're getting a pizza.
We don't know. I don't know what, but so a package store. So we're working with this client. He had purchased it and funded a gut renovation with his own monies, a home equity loan and things of that nature. Funded it that way. Now he wanted to refinance that debt. Yes, Grinders in Connecticut. He wanted to refinance that debt and, convert it into a reasonable rate and kind of get back his cash investment. And he didn't have financials because he was only open a couple of months. Yeah. And we wouldn't even sign him up as a client. I said, it's not going to work. And he says to me, well, at my, I don't know, his golf club or his gym, I work out with the executive vice president
With a guy.
with a guy who's the executive VP for such and such a bank, which is a local banking institution here in Connecticut. He's like, I happened to see him in the locker room the other day, and he said, "Yeah, we'll get you that. Yeah, no problem.
No problem.
Yeah,
no problem.
Yeah."
Let's see how that turned out.
It didn't turn out because I called that guy and he never returned my phone call.
Dude, that was
You teed it up for me?
Yeah. You missed it.
Oh, I was still thinking about grinders, even though we had a really nice lunch today.
Chad, are you from Connecticut? How do you know that if you're in Florida? The viewers want to know. I want to know.
Inquiring minds want to know. So, in other words, the banker is not your friend. And we did a video about that back in 2019 also.
Yeah.
The banker will come off like no problem, all is hunky-dory. Early days of us starting our financing practice, we were networking like crazy people, and including networking with bankers. And in fact, a regional banking institution up here in Connecticut, they're located in New York, Connecticut, Rhode Island, Massachusetts, and I think possibly New Hampshire, but pretty decent sized regional bank. And we were introduced to one of their top commercial bankers. We invited her here to the house. She sat right here at this seat, at this dining room table, and I made lunch for her, and we had a fantastic afternoon. She's a wonderful gal. We had a wonderful, but every scenario that I sent across her desk,
nope,
can't do that. Nope, can't. Let me know. A couple of years when their financials look better, Trevor, call me back. Couple of years. We need the money now.
Couple of years, so they may have money and not need you.
So the other side of this, or the other aspect of this, banks don't want to lend money. Their first line of defense is going to be the dreaded
tax return.
SBA.
Oh, the SBA. Oh, yeah, but
their first line of defense is going to be the SBA.
Oh, let me tell you another story, because I know you guys love stories of shit that doesn't happen when it comes to financing. Okay. We had a bank, a big bank. We won't say who it was. And there was a little
Don't do it.
hair salon.
Oh, I know what deal this is.
Who was, she was buying from
her employer.
Her employer. She was a hairdresser. And
she was a hairdresser and the manager of the salon.
I think the loan, maybe this is the wrong loan. But anyway, whether it was the hair salon or the deli, it was, like $150. The loan was 150 grand. And the bank said, well, SBA wants this. I'm like, you can't just, it's $150,000. Maybe it was the salon where it was only 80 or 90.
It was all of them, honey.
All of them.
No, all of them.
They are not lending their own money.
Every deal that I sent into a commercial lender, their first line of response was, this is great, Trevor. We could do this with SBA. I'm like, I don't want to do the SBA. I want you to lend the money. I don't want to go through the government program. I know what the government program is like. It has a terrible reputation, the SBA. I don't want to go. Well, no, this won't fit into our portfolio. Thing. This is not going to work in our portfolio.
They wore as a badge that they were a preferred SBA lender. I'm sorry. Preferred SBA lender is like an oxymoron. Okay?
Yeah, it means that they preferred to use the SBA.
Yeah. That was pretty funny.
How come we never thought of that one before?
We should do more live shows and come up with this shit, like live.
Oh, RE, you're in California, and I'm sorry that the pizza's not so great in California. I mean, it's not New York pizza. I don't want to say it's not great. I don't want to. In fact, by the way, RE, let me share something with you. The way we got started with the COVID-19 EIDL program was a pizza restaurant in San Diego.
California.
In San Diego. We were working with this client. He was referred to us through somebody I met on LinkedIn.
Yeah.
And he had a vegan kind of Southern California vibe mixed with an East Coast vibe. I don't think
it was vegan, because pizza's not vegan.
It wasn't vegan.
No. That's another oxymoron.
It was like Southern California pizza. Healthy combined with the Italian.
All right, let's move
anyway,
on.
So you had a successful rrestaurant in San Diego, and he hired us to find financing to open a second restaurant. Same concept.
Okay.
$500,000. And obviously COVID wiped that out. We had an offer on the table from a bank. a national SBA lender, and was just getting all the paperwork together and getting the appraisal done. COVID wiped us out, and that guy called us up and said, "Listen, I've heard about this COVID-19 thing. Can you help me?" And that's how we got started.
All right, let's move on.
In other words, the motto and the moral of the story, Linda Ray, it's all about pizza.
Okay.
See what I do that?
So before we lose anyone, let's get going on. See, now I even forgot. We were going on the traditional financing route on how to do it.
So what happens if you cannot get approved?
Okay, here we go.
So first of all, we've done videos on how to apply. And I've given you the bad news just now. The banks want to use the SBA program. They're not your friend. Don't let them pretend like they're your friend, and don't let them use the words "no problem," because it's going to be a problem.
Yeah.
If you cannot get approved through a traditional commercial lender, your fallback options are the following: a community development financial institution, or a CDFI, which I mentioned before.
I got a banner for that.
This is a lending institution, which actually kind of sort of falls under the SBA umbrella. And their job is to do the loans that the banks won't do. In other words, so their underwriting criteria is a little more expansive. You cannot, in most cases, go to the CDFI directly first. My understanding, and I say this because we only got talking to a CDFI once right before COVID, and we never followed it through. But the CDFI requires you to have applied for a traditional lender and get declined. You have to have a letter saying you're declined, and then you can go to the CDFI. So that's your first line of defense. Community development financial institutions, easily discovered with a Google search. Next is minority depository institutions, or MDIs. And obviously these lenders are going to focus on minority borrowers, minority small business owners, the underserved small business owner community. Those, and then you have, oh my gosh.
What are you forgetting?
I forgot what's the third one.
Oh, you want me to put the banner back up?
No, it's not on there. The community, nuts. Totally forgot. There's another, there's three of them. There's another one, which is not right here. Okay. I guess I did a terrible job of writing the script. Okay. Moving on, because I can feel everybody yawning.
You said it, not me.
We're going to talk about Josh's petition. Before we do, just two things real quick. Grants. I see in my YouTube feed lots and lots of videos videos like ours, of, other people talking about grants. The grants. I'm not saying that you shouldn't attempt to apply for a grant, but in our experience, because we have applied for grants,
yes,
they are very difficult to get.
Yes.
So while you're busy running your small business and trying to cope with a pending recession, cope with a challenging employment environment, cope with recovering from COVID, and now this BA4 and BA5, which they say is massively more contagious than even Omicron. While you're dealing with all that, in order to get yourself approved for a grant, you're basically going to have another full-time job. Because in our experience, that's what it takes. Yeah. So please don't fall for the people out there telling you, oh, grants, there's $10,000 grants, there's $3,000, there's $100,000 grants. Yeah, they're out there. Absolutely. But they're very difficult to get, and it's a full-time job to apply for them.
So in other words, don't be disillusioned. I mean, we're not discouraging, but don't be disillusioned when you don't get it quick enough, or you don't get it at all, or. So you want to be prepared. The grants, and let me just say this as a layperson, because again, financing guy, as a layperson.
Oh, that's me.
Yeah, the disaster grants from 2020. And I'm not going to say that it was astounding to hear and to receive the inquiries in early 2022 about people like, what about the grant? It's like, that was 2 years ago, and it was a quick infusion of capital because lockdown was real, and it was
Yeah, but
immediate.
now I'm kicking you under the table because
Wow.
that's a completely different type of grant.
That was my point.
Right. So, yeah. Well, okay. So let me help you get there. It seems like what you were leading up to was, hey, Ebony, it's our pleasure. We love you too. Thank you for being here. I think the reason that there's so much traction out there on the internet, on YouTube, on Reddit, et cetera, with people talking about grants, is because everybody, the average small business owner, may have gotten a COVID-19 grant, or if you're a restaurant, maybe you got a restaurant relief fund grant. And people are confusing that type of grant with the traditional grant. They ain't the same. They're not. That's why we're saying that grants are very difficult to get.
Well, here's another confirmation to attest to the difficulty. If you know anything about nonprofits hire grant writers. Now, I know those are different grants, and I know
no, they're the same grants.
But that's what I'm saying. So this is how serious it is when you are applying for a grant, and the intensity for which the effort you must put in.
Yeah, like something popped up in my Google Discover feed the other day. You know, some retail chain or some restaurant chain is offering grants to small businesses, which is great. But keep in mind, it's a grant process. Here's the other insidious side that we learned the hard way with the Super Bowl grants. Remember the Super Bowl grants?
Oh, God.
Yeah. So at that point, we had, I don't know, 150 clients, 200 clients. We had, substantial number of clients.
It was a lot.
And there was this grant came out like on a Sunday on the Super Bowl, and you had to apply by like midnight on Tuesday. So we did a marathon of submitting grants. Not one of our clients was approved out of hundreds. But worse, what we came to discover, because we created a special Gmail account for our clients for this purpose, and that Gmail was forwarded to me so that it appears in my Aurora Consulting.biz email. So that anytime one of our clients would get that, it would forward automatically, and I could see there was a response. All to this day, I got some emails today from the same grant program. All they're interested in doing is putting you on a database.
Yeah.
Putting you on a legitimate Spam-A-Lot database. So be careful about that too.
That's a really good reminder of when you're committing yourself, just remember, besides the effort that it takes, what's the time exchange? What's the value of your time?
So RE brought up microloans. A little description and history of microloans. So a microloan are small loan amounts, and typically they're funded very often by a not-for-profit organization or a small community-based initiative. They started out actually in India, where people got together to make very small loans to women to start businesses side businesses out of their homes, like textile type businesses. And that's kind of the background on microloans. Microloans are still around today. RE, I think it seems to me, it looks like you have received one. Please confirm that if that's the case.
See, look at Ebony. She knows. Yep.
There you go, Ebony.
Yep.
$5,000 can't guarantee a grant. Exactly. $5,000 to hire somebody to write the grant proposal, and they can't even guarantee an
approval. Yeah.
Well, I mean, if you hired us for the EIDL, we would have told you the same thing. It was $2,500. We couldn't guarantee an approval. But anyway, so with the micro loans, again, I'm not saying you should not apply for them because, again, RE, it appears, and if you could confirm it appears that you got one. We'd like to hear about your experience with that. But if you are careful in your screening and you find the right organization, then by all means, you should apply for it.
Yeah.
Last but not least, and then we're going right to Josh Thomas's petition.
Well, wait, before you launch,
Oh, yes, the Facebook grants.
Good luck with that.
Yeah, we tried that.
I think that's another corporate data mining bullshit, but I don't know. What do I know?
Yeah, that thing never seemed to happen with Facebook. But anyway, last but not least, please, we're begging you, stay away from merchant cash advance money.
Yeah.
You want to tell them why?
I want to tell them why. First of all, if you don't know, let me say this. If you know what MCA / merchant cash advance accounts are, just put thanks, no thanks in the comments. Because I don't want to put anyone.
Can I reach over there and type thanks, no thanks?
Yeah, because I don't want anyone who doesn't know, because we're going to tell you, to feel like they are revealing anything. But so merchant cash advance are the credit card companies that are basically stalking your swipes, and they're going to offer you a deal to get liquid cash fast. The interest rates are exorbitant, but I'm not sure.
Exorbitant is a very kind word.
It's very kind, but
the interest rates are criminal.
That's not even the worst part. The worst part is you don't even get any money. You get the money after they take their cut.
Well, no. You get the money.
No, you get the money, but
then when it comes to paying it back, they get paid before you even get to pay your rent or your payroll.
Right. So, but isn't it like where all the swipes for that month, and then they collect from that money that you would have gotten from the swipes, but they say, oh no, this is what you owe us this month because this is what the interest payment is or whatever. I mean, you know more about it, but
essentially, whether it's what's called a ledger loan, which means they've used your 12 months or 24 months of your bank statements to determine your cash flow, and then they approve you based on your cash flow, and then they set up an ACH transfer automatically deducted from your account every month, whether it's a ledger loan or a credit card terminal loan, which means every time you are swiping your credit card, I say swipe, and Linda taps.
Yeah. Tap.
I haven't quite figured out how to do tap. Hell, I can't even do Apple Pay, but the lender is taking, whether it's a ledger and direct out of your bank account or the credit cards, they get paid before you see one penny of your own money that you're generated for your business for that month. Chad Eckert, our client, is telling us here he has done 2 of them. They are horrible. But Chad, as you probably discovered, and this is going back to my earlier discussion about traditional loans and the fact that the banks don't want to lend unless you're squeaky clean fantastic. The reason these criminal type loans exist is because the banks and the SBA don't want to lend any money. It's ridiculous. If the banks and the SBA would loosen it up and come to realize that folks like you, Chad, and R.E. and Josh Thomas and the other folks on our show tonight and the other folks that we've had as clients, if they came to realize that, you really are the backbone of the American economy, then they should find a way to step up. And because they don't, that's why these loan sharks, as you put them, exist. And by the way, just Chad, you grew up here in Newington, Connecticut. I grew up in New York City. We'll just say on the street, and I've seen the guys who do that.
Well, so this is the
I've never seen them collecting, but I've seen the guys who do that.
They're preying on the desperation of business owners, but this is where, as a business owner, you come in and temper that FOMO of depending on what you need the money for. Now, it's one thing if like your business is really struggling and you can't even pay rent or, provisions and payroll. But when people are trying to grow their business and there's an opportunity that presents itself, and that's where the FOMO might come in.
And they need money.
And they need money because
quickly.
And so then you have to really kind of,
but you can't if you have not prepared for it, which is what we have been advocating since 2018 on our YouTube channel.
We have a video
on our blog
we have
been advocating for all of you to prepare. And we think
I'm looking for the
time is right, because we think that the COVID-19 EIDL program has given you all a sense of what it's like to apply for a loan. And potentially to have gotten approved for a loan, and what, hurdles you have to jump over, the challenges you face to get approved. So if that has kind of created an appetite, because we saw in the early days of COVID, many people featured in the news media being interviewed, small business owners saying, "I've never borrowed a penny in my life for my business. I'm not going to start now." Well, they did start because they needed it, because COVID really was a devastating effect on the American economy, and the EIDL program actually saved, along with PPP and the employment retention credit and the unemployment benefits. All of that saved our American economy. So if you've never had the appetite for borrowing money, it seems like the time is right for us to remind you, we are advocating for you to prepare
is Josh
for it.
Thomas still here? Let us know, Josh, if you're still here.
Well, let's talk about his petition.
We're doing it. So
Josh has created this petition and we encourage you to sign it and to join on board, where he is basically advocating for you, small business owners, to the Congress of the United States, that they need. Josh is here. Hey, Josh.
Awesome.
That the Congress needs to advocate to the SBA and do things like what we mentioned earlier with that discretionary money, bring it back in. Find other funding sources. And on our last show, we talked about what we call in the mortgage business recapture, where there's a lot of fraud that's being caught now by the FBI, by the United States Attorney, the Department of Justice, and they're putting people in jail. And we kind of floated the idea on our last show that maybe, as the federal government recaptures that money from the criminals, maybe that can go into the SBA program. And all of this is included, concepts like this is included in Josh's petition. So we encourage you to go to the petition.
Link is in the comments.
Link's in the comments. We're going to put it up right here.
Well, they can't click on it.
Oh, you want me to just remind everybody that Josh is here?
Yeah.
Josh is here. Here's the petition. And just, Josh is here.
And the link is below.
And there's the petition.
Josh's comment.
But just in case you forgot, Josh is here. Hey, Josh. All right. Do we have any questions?
Well, we do not have any questions.
Well, let's go.
So we have this banner that says Q&A time if you have a question. And I'm bummed because I think actually StreamYard will let me know if somebody on LinkedIn has a question. We actually stopped going live on LinkedIn because it was easier to be on YouTube, and that's where our people are. But if anyone,
don't worry. Listen, she mumbles like that to me all the time in the background.
I don't think I was mumbling.
Well, you kind of went somewhere that we don't. Well, none of us knew where. I mean, me and Josh, we're here, and we didn't really know what.
Anywho, we can answer questions for anyone who has, but we also know a lot of the questions for the last 26 months, not that we're counting, has been EIDL related. Our expertise into the EIDL space was because of our business financing expertise and the loans that we worked on prior to COVID. And so our whole method was a preventive kind of method for people to have information to be better prepared.
We had this crazy idea of doing all those videos and blog posts before COVID, where that, hey, listen, nobody's talking about this stuff. Let's get a message out there, and how to prepare
for applying for a loan,
and what it's, and the banker's not everything we talked about tonight and more. The banker's not your friend.
Watch your tax returns.
Watch your
look back
if you have very little bottom line income because you want to pay very little income tax, keep in mind that's going to inhibit your ability to get approved. You can't have it both ways.
You can't deduct everything and then qualify for a big fat
loan. You're deducting away your loan future.
Yeah, you're deducting.
Come on, a lot of good stuff tonight.
Yeah.
So we had this crazy idea that back then we were going to educate everybody out here in the world, and it was crickets. until COVID came along. So that's why we think time is right for us to keep getting our message out there again.
Well, and we're going to continue creating content to share because, first of all, we had at least 5 calls, maybe 6 this week. And we're not taking consulting clients. We're not going to be taking any more financing clients. It's too risky and we like to sleep at night. But we have no problem coming here live to answer questions on anything related to business financing.
This is the new phase of where we're going with our business. So Turner, SST, which, by the way, Turner, just so you know, Turner is my family name from Scotland, from the Highlands of Scotland, right? And you know what they say, Linda, if it's no Scottish, it's crap.
It's sort of like when you're in California and you really want a New York pizza.
No,
right?
This is from Monty Python. If it's no Scottish, it's crap.
Okay.
All right. So Turner asks the question, do affordable housing programs? Well, I'm happy to report that I don't know how to answer the question, Turner, because I left and retired from the mortgage business in 2018, nearly 4 years ago. But let me share with you some insights that I have from my 30-year career as a mortgage lender. Affordable housing programs very often are total crap. The reason being, as we talked about earlier tonight on our show for commercial lending for small business and grants, often in my decades of experience, the affordable housing programs, plural, tend to put requirements in place that do not match reality. So, in fact, we have a friend of ours right now whose daughter, in a city in New York City, in New York State, not New York City, but one of the cities in New York State, is qualified under a local affordable housing initiative, and is approved. Well, not finally approved, but is essentially, on that track. But so they have a limit in the program of, what did you say, $454,000 loan limit or purchase price limit, one of those, right, for a property, which kind of can almost work in that city. It tends to be a kind of expensive area to live, but you could buy a house in that city for around, $450,000. It'd be tough, maybe, searching, not quite needle in a haystack, but you could find one. Because the houses tend to be more in the $600,000 and $700,000 range. But here's the problem: the program has an income cap of $70,000. Yes, 70,000. Doing some basic mortgage pre-qualification math, there is no way on God's green earth this young woman making $70,000 can qualify at a bank for a $450,000 loan.
So wait, what you're saying is we'll give you the money, but you have to meet these conditions and requirements, and some of them actually preclude the people from getting the money.
And the program, by the way, is like many of the affordable, it's not a loan, it's not a grant, it's an assistance program, which means they assist with things like down payment and closing costs, right? Which means you still have to go to a bank to get approved for the rest of the loan if it's a down payment assistance program. Or come up with a down payment and go to a bank, which means that $70,000 of income, Ari says she's losing us. Is that the audio? Because boy, we worked really hard to make sure. You have to close all those windows. Oh wait, no, you're on different. You're on different Wi-Fi.
Hotspot.
Okay, so Ari could be specific. Does that mean the audio is cutting out? So going back to Turner.
Okay, we're back.
So there it is. It's proof of what I've said, that it's our internet service provider that's the problem. So we live out in the country.
Well, it could be Ari's reception.
No. It's our internet service. There's only one service provider in town, and they suck. Yeah. And we're out in the country, and it's around the time of night, when everybody's getting on the internet to stream the latest Disney movie.
Yeah, that's true.
Including me in a few minutes once I get off the show. But I got a deal on Disney Plus. What can I tell you? So Turner, my long experience in the mortgage industry is that affordable housing programs can be great, but they often present onerous challenges.
No, Chad, do not tell me that.
Static since we started.
Oh, for God's sakes. I'm telling you, Trevor, we have two different mics.
It's not our
used.
equipment.
It can't be the
It's
equipment.
not our equipment. I did a full test before the show.
Oh, for the love of God.
And what we did is we disconnected every computer in the house, phones and everything. We disconnected everything from our Wi-Fi. So the only device on Wi-Fi is this device here.
The iPad.
And so therefore the best way to solve a problem is to remove. So it's our lousy internet service provider. All right. I want to go back to Turner. So
all right.
Turner, there's some light at the end of the tunnel here to my long ramble. There's a program called the Federal Housing Administration, FHA.
Oh, yeah.
This program was created in 1934 as a part of the New Deal, as part of, the whole response to the Great Depression and everything. It is an amazing program that I used for 30 years. Primarily, this is what I did, was FHA loans for 30 years to put people in houses, people who had all kinds of challenges, credit issues, insufficient income to qualify, down payment issues, assistance with closing costs, all of that. Everything you need, Turner, in my experience, to become a homeowner exists within the FHA framework. So we would encourage you to speak to an FHA-approved lender, mortgage banker preferably, and get yourself pre-qualified there. I think you'd be surprised at what can be accomplished with that program, and you may not need affordable housing programs. So there's my long ramble.
So I just posted a couple links in the comments. One, again, is the petition, thanks to Josh. And it seems like, Josh, you're getting some activity. Let us know in the comments if you're happy about the activity or not, so we can keep pushing it. And then we did a two-part, I hate the first part, two-part, one part, two parts, but we did do two videos. They're not necessarily part one, part two. You can watch them separately and independently, mutually exclusively. But it really is two different videos. One is the business loan application process, and the other one is business documents you need to apply for a business loan. So we kind of break that down into a step-by-step how to, what to be careful of, etc. So I put one link in the comments, but the link to the other companion video should be quite noticeable, whether it's the pinned comment or the description or the end screen when you finish the video, because I know y'all are finishing the video and watching the whole thing, even if you are just doing it in the background and let it run on a low volume. YouTube knows when it's on mute. So check that out. And
so Josh, fill us in here. By the way, just so you know that in case anybody is still wondering, Josh is still here.
Josh is here, and Josh is.
So Josh is. Tell me what this means. Keep pushing it. Based on average analytics, we are 2.5 to 2.7 times above.
Nice. That means,
what were your expectations for the petition? Is that what that means?
I'm sure it's comparative to other petitions. I'm wondering, do those analytics, do they compare to petitions in the same nature or the same categories?
Just he's still here.
Josh is still here. Okay, good. All right.
Does anybody else have any questions? Turner, I hope that answered your question. So we actually, we do have another YouTube channel, which is not developed, called T. Curran Mortgage.
No, we don't. We haven't even started it yet.
Well, I have a blog called tcurranmortgage.com. I blogged for many years about the home buying experience. So Turner, if you go to tcurranmortgage.com, look for the blogs that says How I Bought My House, parts 1 through 5, and How I Bought My First House. Because everything you need to know about my philosophy on becoming a homeowner and using the financing, leveraging financing, is included in those 5 parts. But also, there's a lot of other good information in there, stuff about credit. You will see the dates. A lot of it's very old because, I started it in the year 2002 or 3 or something. And then I stopped blogging in 2017, 2018, but I hope that helps you. As always, we want to try to be a resource for folks, right?
Yeah. Also, the other channel that we have is Aurora Consulting, which is youtube.com/auroraconsulting.com. That's our Simple Sense for Small Business. That went on hiatus when we were trying to, wind down when we knew the EIDL program was ending. And we are going to start doing our weekly podcast/video again.
Once I'm done with my 90-day holiday,
which ends in August. He took 90 days from May 16th. To May, June, July, August. I'm counting.
Maybe September.
Well, actually, it will be September because we're going on vacation August 13th
for your birthday.
Yeah. So, but
we're going to get back to so what we with Simple Sense, our philosophy there is we break down
mistakes we've made,
and we break down all the different myriad concepts of running a small business. To large macro ginormic topics, but also really down to like molecular level things that hey Stan,
that's not Stan.
I always think that's Stan.
That's not Stan. Hi, I think it's Mo, right? Mo, because I only know by your YouTube name. Oh wait,
so on Simple Sense we try to break it. We everything. So Linda owned a business. She owned an insurance agency, and I have run businesses, including a mortgage company and a music business, and upper management in retail. So we have decades of small business experience, things that we've seen that make us nuts, that can help you ease your pain. And actually, what we want you to do when you watch our Simple Sense videos and listen to our podcast, which is available on Apple and Spotify and where else? All the podcast platforms. Our Simple Sense philosophy is you didn't start a small business to start a job.
Yeah.
You started a small business to be your own boss, and we want you to enjoy that.
Yeah.
We want you to derive pleasure, and we don't want you working like a lunatic and never really getting to enjoy the fruits of your labor. So our philosophy in the information we present on Simple Sense is there to help make your life easier.
I'm trying to find the Simple Sense. What did I do with that link? The Apple link. I mean, you could probably just Google it, but I want to make sure we have it. But we are open to questions. If you guys have any questions, we can log off too. Because...
Hey Mo. Hey Mo.
I found the Apple. I found the Apple, but I did put Mo Dental Smiles. I did put the link to tcurrentmortgage.com in the comments.
Josh Thomas started his business to save lives. You're a hero, Josh.
Yeah.
And I know some real heroes.
September and you know 11th what? I want to make a comment to this with Josh, because that was the struggle that we had for 2 years with businesses like Josh, who literally were crying on the phone to us when they were talking to us because they couldn't get the SBA to pay attention to their business, their type of business, or the formation of their business, or just something that was tripping up the SBA because they're so pedestrian.
Without it there's too much to cover.
And to see the business owners, doing good work for people,
we had more than a few of our clients when they were approved say things like, "You just saved my business. Speaking of Stan, who we got him approved for his increase
because he also owns a
he owns a dental, actually 2 dental offices. I
don't remember.
He said, "You just saved the jobs
of the families
and families of the employees who work here with the work that we did to help them get their financing." I more than a few times I was on the phone with somebody with their approval and I was in tears. It was very emotional.
So that was the anguish that we felt viscerally in our bodies, which is why we had to shut down our business, because there was nothing we could do. Like Trevor, as a 30+ year loan officer, would talk to these SBA loan officers. You know, we had a select few, like on one hand.
No, there was no few.
Yeah, there were a couple. You would tested like, all right, that guy knows.
I know, but in hindsight, I've looked back and went, maybe not so much.
Don't be Libra.
I'm a
not
Libra.
be Libra.
You're the Leo. I'm the Libra.
Because, you know, we did get people approved even after, you know, so. All right. So just to, you know, wrap up, if there are no other questions, we're here and I check YouTube every day for comments, questions, and just to understand what you all might want to know about certain things when it comes to business financing. You know, people needed us more when it was EIDL, but you know, so whenever we're talking about something general, it's, you know, it's just not the same, but we are here to help in any way that we can. So yeah, Thizzle, oh, Thizzle's back.
Hey,
Thrizzle's back, and it's that, I know, we have all devices off. The only thing is the hotspot.
The only thing connected to the Wi-Fi, Thrizzle, is this iPad. Everything else is disconnected.
We're gonna have to do a deep dive.
It's our lousy internet provider.
Yeah, but this is only the last few weeks that this has been happening. I can see it now actually going. It just like sputtered on the video that I can tell. So anywho, okay. Well, Thrizzle, thanks for coming in at the tail end and telling us our static is still alive and well.
So Josh, we kind of went over this a little earlier in the show, but the U.S. Treasury Program right now, the update as of yesterday, only 5 states are approved, which is the same thing we reported on last show. Those 5 states are
right there,
Hawaii. Oh, there we go. West Virginia, Maryland, Hawaii, Kansas, and Michigan.
I do prepare for these things.
The states will then be responsible for allocating the funds. So like Maryland, for instance, is handing the money to community development lenders, minority depository institutions to help underserved small businesses borrow the money. West Virginia, on the other hand, is creating a venture capital fund. So each state will apply the funds and get it out there. And we know we've seen headlines here on YouTube with some other folks talking about it as if it's a really big save from the government. It's not. It's not, because there's too many working parts of the machine, in my opinion. Number one is states had to have applied for it. They have to be approved by the Treasury. And so far, only 5 states are approved. And then the states in their application will have told the Treasury, if you give us the money, this is how we're going to allocate it. And then once they decide that, so if you're in West Virginia, you've got to, I don't know how to get venture capital money, you know, pitch deck, you know, whatever. If you are in Maryland, you would go to a CDFI, Community Development Financial Institution, and MDI, which is a minority depository institution, or other community-based lender. That's the phrase I was looking for before, community-based lender. And you will be able to get the money through them through a traditional type of loan application. So my opinion is it is not the salve for COVID-19 small business assistance that it is being promoted as. That having been said, apply for it. Because Linda Ray, what's Trevor's golden rule?
Always apply.
Always apply, folks. Always apply. Karamoko Goodman, well, thanks for joining us. Not really sure what you mean by assisting rideshare drivers. We can assist you right now by pointing you to our video playlist, because we've done countless videos about different aspects of running a small business. Here's one thing I can say to you, Karamoko, is this. In our experience for 26 months working on the COVID-19 program, what we discovered is, A, rideshare drivers are qualified and eligible as a small business for a small business loan, which is why we had several of them as our clients.
Yes.
The other side of this coin, the flip side of the coin, you know, that the phrase is going to go out the window, by the way, since nobody uses real money anymore. The flip side of the coin is that many small business, many rideshare drivers do not run their business like they run their business like they're an employee. These people are, rideshare drivers are not employees of Uber or Lyft or Grubhub or any of the other ride typing, type of businesses and driving type of businesses. It is its own small business, and it should be run like a small business, which is why, Karamoka, we point you to our playlist with all the different videos we've done here, and also ask you to visit our Simple Sense podcast and our Simple Sense YouTube channel, because we talk about all the things that you need to know about how to run a small business efficiently and to not only make profit, but also enjoy yourself.
Caprice, I put a link in the comments to a video we did about changing bank accounts. Let me just tell you the short and long of it. Number one, the SBA doesn't seem to have a way to easily change a sequence of numbers. It's very strange and very annoying. They almost put the file back in queue for underwriting. It's completely a disgrace.
Well, it's like everything else at SBA. It's completely bonkers.
It's a disgrace.
But there is a process. It's a federal government agency,
and it can take months.
As crazy as it sounds, they as frustrating as they do have an internal process, which is why we created this video here. It's a video.
Yeah, it's a video. But
don't we have a content product also?
We do have a content product, which I actually did post.
And the information we're sharing in the video and in the content product about your bank account information comes directly from our experiences working with clients whose banks had changed because banks merged during the 2 years of COVID. Banks went out of business. People's accounts were closed arbitrarily or otherwise. Excessive fees. They went to other banks. And the account that they put into the EIDL application back in 2020 was no longer valid a year or 2 years later. And so we learned and kind of codified all that information into the video and this content product, which we're putting up right now.
Yeah, we have. So we've seen this. 4 months is not crazy. As long as
it's not, we've seen it take 4 and 5 and 6 months.
The other thing
right,
too
Kristen,
is yes,
Kristen, California,
so
6 months.
The other thing too is I just want to say, because I'm not questioning anything other than please make sure that you weren't thinking you were approved because they confirmed the eligibility amount, but that you actually were approved and you got the email with the approved green. It says approved, a green button. You sign closing documents, and if all that is then yes, if you changed your bank account, it's very likely that I'm trying to think one out of 100 times maybe they got it right.
You can't use those numbers because we don't know what the
I'm
numbers
just
are.
saying, but it's really
the SBA has asserted that any loan that was approved prior to May 16th and up to May 16th, if the loan was approved, which means that the business owner had signed the EIDL loan agreement, whether it was for an original loan or the increase, SBA asserted in testimony to Congress that if they were approved, the money has been allocated.
Yeah.
So the money is allocated for you. It's in the U.S. Treasury, allocated to your business. Your process, Caprice, is follow our advice, and hopefully that will help you.
I'm putting the signed petition link again in the chat. Y'all need to sign this petition for Josh, who is advocating for all of you. That's what I was going to say.
You owe me a beer. By the way, there's just only one beer left in the refrigerator.
So, yeah, that's it. So what else we got?
Caprice, you are quite welcome.
You are very welcome. Check out that video. Tons of free information. It's not going to you still have to wait. But our paid product has 3 different ways to go about it in case you haven't tried the 3 ways that we share in our product. So there you go.
I'm with Ebony. Thank you, Josh.
Yes. Thank you, Josh. Let's give hearts in the comments for Josh. Hearts in the comments for Josh. Calling all hearts in the comments for Josh.
Just to be sure, because Josh is still here.
Hearts in the comments for Josh, please. Calling all hearts in the comments for Josh, please. Yeah, I mean, it's a mess.
Yeah, Caramel.
It's a mess.
Caramel, if you just joined us, we encourage you to watch the replay of this show. With or without the bad audio. We're not really sure how to solve that problem. But if you do the replay, Karamoka, we're talking in tonight's show about other financing alternatives for you.
Hearts in the comments, please. Calling all hearts in the comments.
All right.
All right. If no one else has any other questions, comments, criticisms,
No criticism.
or
This is
pizza.
Now, I have a very low self-esteem. I cannot take criticism. Just kidding. We had so many haters.
That is
in 2
totally
years.
malarkey.
We learned.
Oh,
we
so
had
yeah,
tough skin,
you know,
tough skin.
I've been earning money on the internet since the year 2000. I was one of the very first Lending Tree loan officers. I don't know if you've ever heard of Lending Tree, but so I used the internet to generate business for my mortgage business for many years. And I used to chat in online forums on Craigslist and NewYorkTimes.com and Yahoo, you know, before Reddit and Facebook even existed, before MySpace even. You know, I got a referral from MySpace once for a refinance.
You're like a pretty cool baby boomer.
Okay, boomer. But I learned early on when people flame you, that's what we used to call it. I don't know what you call it these days.
They troll on you.
Well, that's a
hate
troll.
on
When a
you.
troll flames you or throws hate on you, I developed a strategy early on is to just completely ignore those people.
Yeah.
So very often
We do.
I will be walking through the house or emerge from my office and see Linda like losing it, typing away and like, oh, and I go, what's the matter? Oh, this person just commented. I go, you got to remember the rule.
We block.
Don't respond to trolls.
We
Just
absolutely
don't
block.
acknowledge them.
Yeah.
They live for getting a rise out of you.
I know. It's so strange. I don't know.
Shall we say good night?
Let's sashay out of here.
Okay. Shall we say
Well,
good
thank
evening?
you, everyone. And thanks to Josh. Josh, thank you for your advocacy. Thank you for, you know, just putting that petition together. Thanks to all of you who have signed it, because I know if you're watching this, you clicked on it and signed it. And Josh, thanks you too. Not to speak on behalf of Josh, but good evening to you, Ebony. Thanks for showing up. Thanks for being here. Thanks, everybody. And we will see you next time. Stay tuned. Stay well. Stay
Good night,
healthy.
folks. Thanks.